Welcome to the latest economic update from Cranfield. What we're going to do today is look at the outlook for 2011. And joining me in the studio is Professor Joe Nellis. Now Joe, from an economist's perspective, what can we expect? Plenty of gloom and doom? Certainly the latest GDP figures for the last quarter were full of it. Certainly not what we expected, were they?
No, you're quite right, Steve. The fourth quarter figures reported a fall in GDP of 0.5%. But let's just emphasise it's an estimate. It's based only on 40% of the sample data. It could be revised upwards and of course downwards, but it wasn't what we expected. There are a couple of points within that we need to note. Construction fell by 3.3% in the quarter, but of course that's the bad weather effect. Retail spending was also down, but again people stayed at home. On a positive note, if I can find something positive in those figures, manufacturing was up 1.4% in the quarter, which perhaps signifies that it isn't all gloom and doom.
So if we're driving along and we're looking at the economist's dashboard, are there any red lights flashing on there?
Well, the fourth quarter itself is a warning about the future, perhaps. And the big question is, is the economy resilient? Are we going to see the first quarter of this year bouncing back? In other words, the post-winter effect. Of course, there may be bad weather in January and February, so we've got to wait and see. My expectation is that we will see a gradual recovery this year in 2011, and we expect that. That's almost inevitable. But there are two red lights that need to be flashed up, as you say, and that is, first of all, inflation and unemployment. We're heading into a period now where inflation is still moving upwards, well outside the official target range, but we do expect it to move downwards again towards the second half of the year as commodity prices come out of it and VAT begin to diminish. Unemployment is creeping up, no doubt about that, and we will see that for some time. It is the effect of the public sector cutbacks, of course, but can I just say on a positive note, trying to give a balanced picture, 80% of the jobs in the economy are provided by the private sector. And so the hope is, and there are some signs, that the private sector is and will take up some of that slack.
Now, a good cautious economist like yourself is going to look at the risks involved. Can you spell those out to us?
Well, this recovery is largely being driven by corporate investment in stock building and as I said, manufacturing, as well as by exports. Now, of course, the risks are not just UK risks in terms of inflation and unemployment and the government spending cutbacks and the tax increases. There's also the risk of the global economy, as it were, moving against us. But there is some good news on that front, because today the latest figures from the IMF have reported that world growth is picking up. So actually that's good for our economy, but nevertheless it's a risk we cannot ignore. There's always a possibility of a downturn in America, obviously.
Well, let's pick that up, because what's the outlook looking like? And if we put that within the context of America, also Germany and the Far East, what's going on?
It is a mixed picture, Steve, I have to be honest. America is recovering, but I'd like to emphasise that the crisis in their housing market is not yet over. They're going to see perhaps another 1 million people have their properties repossessed this year again. So they're not out of the darkness, they're not out of the trouble yet, but they are recovering in general. Germany's doing quite well, but again, to reinforce what I said, as the world economy picks up, remember Germany is now, well, it was the first, it's now the second biggest exporter in the world. So German manufacturing is doing quite well, fortunate for them. Other parts of Europe, of course, it's not so good. Ireland and Portugal and Spain and Greece are still in severe trouble. But if we look elsewhere, particularly at the emerging markets of China and India, they are really motoring ahead still. And there's a very clear reason for this, that they do rely on exports, but they're becoming less reliant on exports because their own domestic economies are now being, as it were, internally stimulated, and that's driving their economies forward.
So in conclusion then, Joe, what message would you like to leave us with? The gloom of these latest GDP figures, or maybe some hope that year ahead things are going to look better?
Well, I do accept there is gloom around still, but if we go back just 3 months, we had 3 consecutive quarters of positive growth, and we were almost celebrating that. We had the worst winter for perhaps 100 years. So again, that's realistic, not just cautious optimism. At the same time, looking ahead, I think the UK slowly but surely will get back on trend rate of growth, something above 2.5% by 2012, and beyond that, having left behind the gloom and doom of the last couple of years, I think we'll see steady growth for the foreseeable future, but really sometime towards the end of this year when we can begin to feel a bit more confident about the future.
Joe, thank you very much.
Thank you.